Back, Money Mastery, Part 2. Jim, what's it all about?
Well, we started with cash flow, we started with growth, we started with big hits in the wealth wheel. Now we're going to go into the little detail, actual strategies you can use in property, strategies you can use in shares, strategies you can use in business or taxes to save more money. So we're getting into the little detail right now.
Fantastic. So we really hope you've enjoyed Part 1. Come now, Part 2. It's going to be an absolute game changer, how to make money, manage money, and multiply your money.
Leverage, definitely. We have leverage in property. We have leverage in shares. We have leverage in business, right? We also have time leverage, right? Time leverage being the ability to manage our time. In fact, one of the things that you're going to learn from Adam when we do the time management piece is making sure that you have a not to-do list. Right? We want to get a virtual assistant. We want to put those things. So one of my favorite things to get rid of in life is things that are mundane, things that are habits, things we have to do, but we don't really have to do them. Like, for example, should you be cleaning your house? No way, Jose. I'm not saying leave your house dirty. I just had versions of mold. And, yeah. Why? You shouldn't be doing that. Your significant other shouldn't be doing that because they could be spending time with you building a relationship as opposed to cleaning the house. Is everybody with me here? Right? Now, if you like house cleaning, that's a whole other thing. If your business is house cleaning, that's a whole other thing. But it's not something in terms of time management that's the best thing to do, right? You know, the same is true with one of my mentors, Charles Gibbons, said this: Jim, do you cut your grass? And I said, religiously, every Saturday, 10 o'clock to 2 o'clock, right? 10 in the morning to 2 p.m., right? And he said, that's the reason you're not a multimillionaire. Now, I was doing pretty well at the time. That surprised me. I made 600 grand with Chuck, right? Right, and I'm going, well, you know, he's saying, why shouldn't I cut my grass? Because I'm conditioned to cut my grass. He said, well, why don't you take those 4 hours every Saturday that you're cutting your grass, get somebody $5 an hour, right? 20 bucks, right, to cut your grass, and you go look at property. So guess what I did for the next 3 years? Every Saturday from 10 o'clock to 2 o'clock, and I've said this already, schedule your success. Book the time, the result will come, right? Book the time, the result will come. Every Sunday night, 6 to 8 o'clock, sometimes even till 10 o'clock, I would work on myself. I would work on my knowledge. Every Saturday from 10 to 2 p.m., I looked at property. Guess what? Did 2 deals my first year, 6 my next year, right? 36 my third year, right? So we want to make sure we're taking time leverage and putting it to work for us, right? When I say time leverage, using other people's time, not your time. One of my favorite websites in the world is Fiverr.com, right? Does anybody know what Fiverr.com does? Everything for £5, right? Sometimes 30 pounds, depending on whether you buy a package or not, right? Want to write an article? Fiverr.com. Nowadays, want to write an article? ChatGPT, right? Right? So, I mean, I wanted to look at UK taxes because one of my beliefs is, because I'm going to talk about that in just a sec, is, you know, 1/3 to 1/2 your wealth is going to come through tax planning. And I know the US tax code really well, don't know the UK tax code, but I learned that there's 16 deductions that you can take as a UK business holder. Would anybody like to know what they are? Yeah. Would you like me to share it with you, like literally in the next hour or two? Right? So I'm going to stick it into the WhatsApp group as an article, right? Guess who wrote the article last night? ChatGPT, right? And I have the 16 pieces. Is everybody with me, right? Could you have done the same thing? Is that a more effective use of your time than me researching the UK tax laws and writing them all out and then writing an article, right? So use tools like that, Fiverr.com, you know, ChatGPT. One of my favorite is Upwork. Right? Does anybody know what Upwork is? Same sort of thing. Post a project. The project will get done in the next 2 weeks, 3 weeks, whether it's a website or whether it's writing a book. I wrote a book called The China Connection before Alibaba exists, right? Or AliExpress now, right? Used to be Alibaba, now it's AliExpress. I wrote a book called The China Connection. I sold it online. Now, did I write the book? Well, it's under my name, right? It was work for hire, and guess where I got the book written? Upwork.com. I wrote a book called Credit Spread Investing. After 2 years of credit spread investing, guess where I got the book done? Upwork, back then called Elance, and Upwork bought Elance, right? $161. That $161 book has literally made me $1.5 million over my lifetime, right? Literally, right? So should you be careful about your time, delegate, use other people's time to get the result that you want in life. Is everybody with me here? Set the intention, the result will come. Dedicate the time, the result will come. Is this making sense to everybody? Right? Okay? So, and the last one that's really big is taxes, and I'm going to put asset protection, right? Right? Maybe put asset there. Right? Asset protection, right? So we definitely want to make sure that we learn about, taxes and asset protection. And I'm just going to jump online here to get back to my website, get back to my presentation, right? Did you guys find that useful as a big picture kind of piece? Would you like to see a little bit of the detail, right? That was like one oh yeah. Oh, people would like to see the little detail, right? Okay, there you go. I got it, right? Right? So if you'd like, I'm going to put this in the WhatsApp a little bit later on. But this is my matrix, what I call the money matrix, taking it from the big picture to the little steps, right? So basically what I believe is, as a plan for you, and this could be the basis of your plan, and I'll get into a little detail. I'm going to put it in the WhatsApp group so you don't need to take a picture, right? Right? As a piece, right, there are kind of 4 major areas that you want to focus on. Now, I already talked about cash flow, right? Already talked about growth. Didn't talk a little bit about speculation, but that's really leverage, right? And then, of course, we need to think about the tax considerations of things. One of the areas that you want to work on is stock. One of the areas that you want to work on is real estate or property. One of the areas that you want to work on is business. Is everybody with me? Right? Now, general guidelines. I don't know where you are financially in life, but general guidelines should be the following. Most people, as a strategy, focus on growth, right? They put their money into a stock or into a mutual fund, right? Long-term strategy, not the best strategy if you're trusting somebody else, by the way, okay? I would rather do the growth strategy myself, and I'll give you a couple of places that you can do that in a couple of minutes. But within each of these, there are strategies. Is everybody with me, right? So, and generally speaking, as a guideline is, we want this to be 45%, this to be 45%, and this to be 10%. Is everybody with me so far? Right? So what happens for a lot of people is they decide they're going to do something speculative, maybe with high probability, maybe not. But what they do is, you know what? I have 500 pounds. I'm going to stick it into Forex because there's 50% leverage or greater, right? Which is a higher risk. They don't know what they're doing. They're guessing, right? And what happens is they lose the money. Is everybody with me? Right? Or they trust the financial experts out there. They put their money into HSBC or something like that, and they hope and pray, because that's what you do when you put it in the stock market. You're hoping and praying, right? Because you don't know what the probability, I know what the probability is, you don't, right? And then they wonder, geez, Coca-Cola, I bought it 59, still at 59. Is everybody with me? Right? Anybody realizing that you're making a few mistakes? Right? Do we want to change that today? Yes, so what do we need to do? Take action. Right? Would you guys like maybe 4 or 5 things at the end of my presentation to take action on? Yes. Well, if that's okay, say yes. Yes. Oh, that's a much better yes. Right? Right? Oh, so they do this. And where they need to focus is cash flow first. Cash flow for business is number 1. Cash flow for stocks is number 1. Cash flow, in terms of property is number 1. The growth and speculation is a longer term and something we do over time. Is this making sense to everybody? Makes more than sense, makes what? Pounds. Now, you're going to find that of these 3, right, and there are a couple more, by the way, right? Anybody want to know what the couple more are? I don't have time to do that, so we'll talk about that at a later date, right? Right? Always good to come back to this information, right? So you're going to find that you have a propensity to do one or the other, right? Geez, I really like property because it fits me as an individual or as a style, right? I did 130 plus properties, but I got to tell you honestly, I hate property, right? Why do I hate? I love the cash flow of property, but do I like the negotiation? Do I like the finding the money? Do I like writing the contracts? Do I like finding the tenants or getting a property manager? Not really, but I love the cash flow. Is everybody with me? Yeah. So I did it even though I didn't like doing it. Is everybody with me? Because if you're a little bit of a diamond personality, and who's the diamond personalities in here? I don't like this, so I'll go do something else, right? And I realized that if I did that, I'm giving up a chunk of cash that could give me the cash to go do something else. So you have to finish. Even if you don't like it, you got to be disciplined to say, every Saturday from 10 to 2, I look at property. I did that for, what, 7 or 8 years. Is everybody with me? Every Saturday, unless I was speaking. Okay? Religious, no question, no doubt, 100% commitment. That's the way you get to the million, the 5 million, the 10 million. Is everybody with me here? If you are, say, oh yeah. Oh yeah. All right, so we definitely want to make sure we're getting that. This is the US version, which I'll happy to send you. Would you like it? Yeah. How about the UK version? Yeah. All right. That might be something a little more interesting, right? So just last night I started to flesh it out in terms of it. You know, I'll send it in the WhatsApp group to you. So good piece. So, and actually I'm going to flesh this out a little bit more, right? Because I want to talk to Adam a little bit and Liam a little bit. But I'm going to end up sending you this, which is the little detail that you want to focus on. Is everybody with me? Right? So we definitely want to make sure we're doing this. Here are some of the greatest mistakes. One source of income. 2, no diversification. You want to make sure that you do have stock, you do have real estate, you do have business with respect to that. One of the worst things you can do is to remain stagnated, is to not continue in terms of the education, the pieces. So we always want to be investing in ourselves. Does this make sense to everybody? Who would like a copy of my slides? Right? So Jane, is it okay? Yeah, I'm happy to do that, right? Right? So get the money matrix, start learning those pieces with respect to it. One of the things you do is you want to get specialized knowledge, right? Specialized knowledge about stock trading, specialized knowledge about asset protection, those kind of pieces, right? I did a night trade last night. I made 7% last night from 9:30 till about 11:30 at night. Is that a pretty good rate of return? It is. So we can begin with some simple stuff, but you can actually start to do things like day trading, right? I love to day trade. In fact, before Adam tapped me on the shoulder and said, "Do you want to come to Thailand next year or this year?" That was like January of last year, right? I said yes immediately without even talking to him about the money because I wanted to be here, right? And then I was trading 3 days a week, Monday, Wednesday, and Friday, and making 3 to 7% each day. 20 to 40 grand each day, right? Do the math. I could quite comfortably live on that for the rest of my life. Is everybody with me? But do I seem like the kind of person that likes to sit in front of a computer? No, right? So I like sharing results, right? So you can do something. Get a wealth mentor with respect to that. I know you guys already have that. You guys have heard the 10,000 hours, right? 10,000 hours to become an expert. What does that mean? If you do 5 hours a week, 39 years, right? Is there a faster and quicker way? Yes, no question, right? So take control. This is something you guys don't know. The market generally in the stock market goes up 5 to 6 years, then goes down or sideways for 2 odd years, right? And there are a couple of simple things you can do to know when the market's going to crash. One of them is called the 200-day and 50-day moving average, right? And what that means is we look back at the last 200 days, we look back at the last 50 days, and we average them, right? So we end up with this line or curve. Is everybody with me so far, right? And there's something called the death cross. Now, do you think the death cross is a good thing or a bad thing? It might be called the death cross for a reason, right? So what it basically means is you can look at the market in general, and when the death cross happens, in the next 6 months to 12 months, the market's going to crash and burn, right? Would you have liked to have known this For example, in 2008. In 2008, the death cross was clearly visible, right? When I would say it was clearly visible, it was visible on 3 of the major markets in the US, as well as the UK, as well as Singapore, as well as every place around the world, right? So when the death cross happens, it's the death of the stock market, the death of the stock, and many people lost 50 to 60% of their investment holdings when that happened. Yet every financial advisor knew it was happening. Did they call you and say, hey, look in the next 6 months to a year, it looks like the market's going to crash and burn. Take your money out of the market. Did you get that phone call? Why not? They're a financial advisor. They won't make any money out of it. Everybody took some money out, they're not going to make any money. They're not going to make their residual, they're not going to make their commission, they're not going to make all those things. Is everybody with me? The mutual fund managers personally were trading in their own account, dumping stock, and in their mutual fund, they were holding on to it. There's something wrong with the system. You guys with me here, right? So literally on the Dow back in 2008, here's the 50-day, right? And here's the 200-day moving it. Here's the stock market going up. This is the Dow Jones, 30 big stocks in the US, right? By the way, they're not just in the US. Where are they? All around the world. They're Coca-Cola. They're the companies that are worldwide. Is everybody with me, right? There's 30 of them. There's only 30 Dow stocks, by the way, right? So when you hear the Dow, you think it's huge. There's only really 30 stocks, but they're huge stocks. Crosses, right, in January of 2008. Call my mom. Get out of the stock market, right? Doesn't have much money. Got 80,000 in the stock market. Mom, get out, get out, get out, get out. She thinks I'm still a football player in college, right? Not that I've owned a business, not that I'm buying property, not that I know the stock market. Call my dad. He's got 800,000 in the stock market, getting ready to retire, right? Dad, get out of the stock market. Talked to my financial advisor. He said there's a little bit of a dip. I should buy more. Dad, it's going to crash, right? This happens immediately. Goes sideways a little bit. Then this happens the next year. 6 months to a year, crash, right? Someplace in here, my mom calls me and says, what do I do now? And I basically say, you're screwed, right? Well, you can get out now, you're gonna lose money, right? Or you can wait for it to rebound and come back, right? You know, she doesn't want to get out. You know, she talks to the bank, because in Canada, the bank is the fiduciary. They say, well, there's a major dip. What you should do is invest more money. Listen to the stock guys all the time. Dip, buy more money. Buy more stock. They are not technical analysis, right? It's amazing when there's a major drop in the stock market, all of the talking heads start saying, buy more, buy more, buy more, buy more, buy more, right? Now there's a time to buy more, right? But it's not when the stock market is crashing and burning, right? In fact, what you want to do is learn a strategy to play this. By the way, this just didn't happen on the Dow. This is the S&P, right? This is the Russell, right? Let's go back there. That's the S&P, crosses, right? That's the 500 stocks. This is the Russell 2000, 2,000 stocks. Was it their clear indication the stock market was going to crash and burn? Simple strategy. Go onto any of the free charting things that are out there, like charts.com, right? Or, you know, stockcharts.com, sorry. You go to Yahoo Finance, right? And literally put in a 200-day and 50-day moving average, and you'll know whether the stock is going up or down for the next 6 months to a year. Does that make sense to everybody? Right? Did you enjoy that? Now, how many people, besides saving and making money, would like to make some money? Oh yeah. Oh yeah. Oh yeah. So, if the stock market is crashing and burning, guess what? You can make twice as much money on the downside than you can on the upside. It takes 5 years for it to go up. In 1 year, it crashes and burns. I can make more money on the downside than I can on the upside in a shorter period of time, right? So literally, I can do something called a protective put, right? Write that down, go research it yourself. I'm not gonna teach it right now. I will show you an example of it, right? But literally, as the stock market crashes, right? For every dollar it goes down, you can make $1. How many people would like that, by the way, right? Now, there's something in the stock market called options, and an option either is a call or a put, right? Now, I used to get these really confused, right? So I wanted to learn, what that really means. Would you like me to give you a simple acronym, a simple memory device that will make sure you know it for a lifetime? Yeah. When the market is going tall, I buy a call. When the market is going tall, going up, I buy a call. When the market is going to the foot, I buy a put, right? When the market is going to the foot, I buy a put, right? Which just basically means as the market goes down, I make money. As the market goes up, I make money. Is that a pretty good thing? By the way, $1 will control $10, so I also have leverage as well as direction. Is that a good thing, guys? Right? Buy a put, buy a call, right? Now, we have something called the protective put, right? So just so you guys know, the existing financial system in terms of stock trading is kind of flawed, right? What I mean by flawed is, if you invest in a fund, generally it has to go up and they don't make money on the downside. Has anybody ever here put money into a mutual fund or a financial advisor? If you have, put your hands up nice and high. So you get this perspectives, don't you? They say they're going to buy these segmented stocks or these sectional stocks. They cannot change that. That's the Titanic heading for an iceberg, right? They can't change, right? They can't. They told you what they're going to buy, and they can't change it, right? And the Titanic has a really hard time shifting gears. It hits the iceberg and sinks. We as individual investors, guess what? We're in the speedboat. We can zip around the iceberg, and right? We can get around it, no question, right? So we definitely want to make sure we're not just investing blindly, it's investing to have peace, right?
There we go, part 2. Jim, that was incredible!
We hope you enjoyed it. We enjoyed it because we know it is the difference between success and failure. You want to make sure you're taking action in your life to improve your wealth as well as your health and your happiness, right?
Of course. Jim is a master at this, the living legend. He's been doing this for many years. Almost 50 years now.
He's aging me again.
So there we have it. Thanks for tuning in. Assets for Life, UK's leading property business and wealth training organisation. Hit the link in the description. Come and join us at one of our up-and-coming events where I will show you how to make money, manage money, multiply money, live the life that you truly deserve and desire. If we can do it, you can do it. Hit that button, grab your ticket.
And we'll see you on the other side.